Thanks a million, Eric, for this great presentation, and thanks everybody for being here. Not that many time ago, this kind of session was more empty, so we're really proud of this. And now we can't wait for the real-life testimonials of great people that have insights and really experience in this industry. Just a wrap up about Bpifrance and digital assets. We have 250 million euros direct and indirect exposure. Of course, it's a risky asset, and we have a 90 billion euro balance sheet. So we know what we're doing, but we are convinced, as Eric said, that it is partly the future of finance. Let's go back to our great speakers. Can you just introduce yourself quickly?
Good afternoon, everyone. I am David Bachelier. I am the CEO for Asia for Flowdesk. Flowdesk is a French headquartered company involved in the space of market making in digital assets, so financial service for crypto. We offer market making, but also OTC execution, derivatives products, perpetual futures, etc. I live in Singapore for 13 years. I'm a permanent resident, and I'm a happy citizen.
Fantastic. I think we've got our pictures swapped, so maybe we can switch. We don't confuse people for your handsome face with mine. Pradi here, long time in Singapore, counterparts of BPI in Singapore obviously, I won't introduce Temasek because you're in Singapore. I lead digital assets amongst other responsibilities at Temasek. We'll talk more about what is our own conviction around the space and activities in the space.
Hi, I'm Pauline Ray. I've been in Singapore since 2008, at the beginning of the financial crisis, and I've seen how Singapore has transformed into a digital financial hub, a fintech hub, and I've been part of that. At the moment, I am a co-founder of Emerald Climate, really focusing around innovation and technology in the transition, and also executive producer for True Media Group, which is a think tank in policy, innovation, and also energy transition, because I do find that the storytelling piece of any big changes are important for us to be able to move forward. And I believe Singapore as a hub has a big place to play in that.
Thank you. So what are digital assets for you? We ask for very personal and intimate testimonials. We had a great presentation, but let's try to make it more personal here. What are digital assets, and why do you think they are important?
Yeah, sure, I can start. So, unlike Eric, who's read the white paper 10 years back, I had not read the white paper 10 years back, not as smart as him, but actually met Vitalik, met Gavin Woods more than a decade back, as they were passing through Singapore when Ethereum Eco was being kind of evangelized. Fundamentally, for me personally, I have a career that's been built around financial services. I just see it as fundamental rewiring of infrastructure. The simplest example I give of this is that we all, over centuries, have grown up with physical objects. So you started recording transactions in some physical format. It could have been paper, it could have been stone. We took that record-keeping system and we moved it to electronic record systems, which essentially meant that different institutions maintain different records and you kind of pass messages to each other. And what digital asset does with the availability of technology is just makes it easy for you to not have to do traditional based financial services or record keeping. It allows you to do a lot more with that, many more functionalities, etc. So yeah, fundamental rewiring of infrastructure, a bit messy, like when you introduce horse carriages and when you introduce electrical sort of appliances and locomotives and so on and so forth. Yeah.
So for me, digital asset is simply the future of money, because what we have seen in the last 10 years, so I'm the same generation, crypto generation, like 10 years ago, and what we have seen over the last 10 years is a move from hype what was starting with buzz and hype and fancy, a lot of scams as well, into infrastructure. And today, the beginning of the acceleration that we are witnessing in the market, as Eric described previously, for me is the beginning of the next phase, which is mass adoption, both by institution, but also the future of money for AI world, because the agents, the bots, and maybe the robots are not going to use fiat currency for their own usage, right? So that's my view.
So for me, I would say it plays a big role, especially I've lived for a long time in the developing world because of my father. He built airports for a French company, Latin America, and in Africa. And last year, so if you think about digital assets, blockchain, DLT, but also what is money, right? Last year, actually, I was in Bogota. There's a museum of money, and it walks you through the beginning all the way to a bond from London 200 years ago, which actually bankrupted this new country. Because the standards that they had committed to, plus the pricing, had nothing to do with, there was a lot of risk, and it did nothing to do with the country itself, right, and some of the frictions. And for me, digital assets, what it represents is the opportunity to have underlying data, metadata, right? So think about it as, there's a lot of confusion between actually what some of this fractionalization is or a token is. Sometimes it's just a PDF with no underlying information. But if you have the metadata, think about it like when you take a picture with your smartphone, right? It has the geolocation. Sometimes it recognizes who it's in the picture, if it's in your contacts, and so on and so forth. And it gives the opportunity to be able to do, for example, project financing in big infrastructure projects with metadata potentially that can be leveraged for credit, right? For just leapfrogging in some of the regions and also in some of the big infrastructure projects that we have, especially now with energy transition, and allows us to do that. So for me, it's going to unlock the future of financial services because we have an entire region and regions that really depend on that project financing, and are struggling to get to have that availability. So I'm very hopeful that with Singapore and all of the activity that they're doing as a hub, we are going to see a lot of this infrastructure, DLT, blockchain, being leveraged to be able to do this. So that's, for me, it's going to open it up.
Thanks a million for all these testimonies. Stablecoins have been mentioned before. It has a huge influence right now on finance, payments, and even monetary policies now. Tether is the 16th holder of US treasuries. It's more than Germany and South Korea. Sounds crazy, but it's the reality and it's growing. How do you see these stable coins? Are they useful? A central banker would look at you with some scrutiny. What is a stablecoin and what it seems so important right now to you?
So maybe I'll start. So stablecoin for me, at the moment, it's a digital version of fiat currency that are on-chain. So it's the first example of tokenization. So it's tokenized cash. We can see it as that. Currently, one number important to remember is that we keep hearing about stablecoin, and at the moment there are 300 billion of market cap in stablecoins, but that represents just 1% of the total amount of US dollars in circulation in the world. So it's just the very, very early stage and beginning of this adoption. Similarly, another metric that I think is important for everybody to remember is that stablecoin has processed the same amount of transaction as Visa in 2025 for the first time. This is also very telling. So we have seen that Visa is coming to digital asset and stablecoin, but this for good reason, right? They have been disrupted by the on-chain of payments. Now, I think an angle that is quite interesting for stablecoin is the fact that we hear a lot in 2025 in the geopolitical complex landscape we are in about de-dollarization of the world. But in the current state of world, 99% of the stablecoins are US dollar denominated, which means it's a counter power and counter effect to the de-dollarization of the world. On the other hand, actually opposite to that, if Europe and Singapore and non-US jurisdictions are not getting together as regulators and put up together a framework for stablecoins non-dollar, that would mean it's an open door for America to import into other countries their monetary policy on the dollar. But I think big is for the...
Yeah, so I had the pleasure of moderating a panel at Singapore FinTech Festival for 50 minutes. So you've asked one question and we can go on forever, so I'll try and keep it very brief. Interestingly, in Singapore, for Temasek, we set up an AI effort and a blockchain effort in 2018 as you're trying to look forward. And I actually find it very amusing how there's so much stablecoins, and so much AI. I can't sit in the room at some point when I listen to the buzzwords. What I'll say is, I would simplify it a bit further and say that for the first time, it's like we said, the future of money in general, being tokenized. It can mean many things, but simply represented on a ledger and being made available to customers where they can start interacting with it. Stablecoins is not the only tokenized form of money. It's just a reminder to ourselves, right? It is something that's digitally native and therefore shows the set of features that can be enabled for the first time. So all the volumes that we've spoken about, David, actually are in crypto native environments. You're beginning to see a spike in terms of mainstream usage. But the banks are not sleeping in the chair. The regulators are not sleeping in the chair. You should be seeing in the coming few years, it's slow, but tokenized forms of fiat money, where money market funds, you will see tokenized fiat, actually. Good old boring deposits will be available with features. So you saw JP Morgan and DBS announce something. In Singapore, we started something called Partior many years back. So you'll see a lot of these functionalities available, quote unquote, on chain. And there are many kinds of chains, right? There are chains which we keep permission, there are chains that are public. But by and large, I think the important thing to note with stablecoins is the features. This thing where something is not only available 24/7, but you can write code and you can move things automatically with it. It's just easier to do with stablecoins today, but you can do it broader. One example I'll remind people is that, leaving aside views on Facebook, the Libra DM project is something that came up in 2021. And actually, some of the biggest companies globally, including ourselves, to our defense, backed version number 2, not version 1, where you could actually help with micropayments. You could actually help with cross-border money movement. So it's not a new concept, even outside of crypto. But thanks to the Americans now with the Genius Act and everybody having a feeding frenzy around stablecoins, you will see many more forms coming up.
So again, it's I would say it's down to credit as well. Well, firstly, it was very good to see it adopted. There was a bit of a touch and go moment when BIS, probably remember, they were like, no way. But luckily, there was a change, and now we have somebody that was part of that discussion, part of the advisory group of GFTN, which is the force behind FinTech Festival and all of those initiatives. So. I got to see it, stablecoins, the important role of it. In 2022, I got to work for a project. EDB did a program called the Corporate Launchpad, and I was paired with a bunker trading company. So Singapore is the biggest bunkering hub of the world, which I didn't know, and I've been here since 2008. So when you come in, all of those chips that you see, it's not to offload, it's actually to refuel. And the reason we are that hub is because, very early on we put the infrastructure, but also we have the financial infrastructure, lending, insurance, lawyers, all of that. And one of the traders that was doing really good and was part of this program wanted to become a digital disruptor because it's actually very difficult to have a credit to be able to, as a trader, to be on both, to be able to do that trade, right? So a ship owner would say, hey, in 7 days or 11 days, I'm very close to La Palmas or Singapore or whatever, I need this many metric tons of fuel. So then you go to the supplier, you always pay the supplier on time as a trader, and they give you 30-day payment terms. So you charge that back to the buyer, but it could potentially be 45 days. But you can only secure that if you have that in your account. So you go to a bank and you ask for a loan to be able to provide this, so $65 million or something like that, right, to be able to do that job. You might get charged 9% all-to-all from a credit perspective. You have to get an insurance. The first $1.2 million first loss is on you anyways. It's protected by maritime lien, so there's not that much default. And very hard to get that loan. So what we were exploring is actually stablecoins, because with stablecoins, first of all, I mean, you can also, to your point that you can codify it, you can say, you will release this amount when this happens. Also, you can embed sustainability, carbon credits. There is so much more that you can put in that messaging, and it doesn't cost you 9% as well. So, and it's 24/7. So the usage of it is just incredible, and it just allows you to build better credit history or credit engine of an industry, and also to clean the name as well of an industry that is so important, because 99% of the things around you come by ships. So, and yeah, so I guess through an example, that's what it means to me.
Thank you. Very concrete. Can we scratch the surface of regulations? So you have European regulation called MiCA, Market in Crypto Asset. Singapore was spearheading regulation on digital assets. And now we have a newcomer called the US with Genius Act, and that has been done, and Clarity Act that is finalizing right now. Can you just explain the main differences? How can we foresee some collaborations, and what is needed to be done?
Yeah, I mean, maybe I can go first on this one. So actually, it's a complex subject, because for the first time in financial services, you have a technology that allows applications to be deployed globally on one infrastructure. But interestingly, because of the nature of the industry and the catch-up, regulations are being set up country by country, which, by the way, is a great first move. I mean, don't get me wrong on that, right? I think it's very important. But the nature of the technology is such that it's just global applicability. In fact, if you ask any of the regulators more privately, they will say that, what do I do with my citizens, right? It's not like you will tell the citizens, if you use this technology, I'm going to put you in jail. I mean, that's not the point, right? At best, what they can do is they can do all the right things for consumer protection, because there's so much of a scam kind of activity that can happen around the technology. Now, the reason I'm going into this is that it's obviously fantastic that the US is moving forward and giving clarity, all pun intended there. Timing unclear even though right now. The issue though is going to be for us as market participants is that what happens today in the established financial services system is that, let's just say there's a bankruptcy of any form of a financial services institution, you actually have rules that have been put in place where you can deal in an orderly manner with the situation. And there tends to be like a holdco which has a very sophisticated regulator who will kind of take care of things. But now what you're in the interim state looking like is you're regulated in each country, but you don't actually know, because there's a lot of offshore customers. Now these may fall under exemptions, so on and so forth, but that provides and creates a big systemic risk. We've seen that in the past in industry, right? And that continues to be an issue. So, I mean, I'll give you a concrete example is that if you're an issuer of stable coins, if you're going to issue stable coins under the Genius Act in the US, it's quite likely the same issuers likely to issue stablecoins outside the Genius Act for the rest of the world. So then what are you supposed to do in the rest of the world, right? So now, are we going to have different regulations in different countries? And to your point on monetary policy now, many of those are denominated in US dollars, for example, right? So it's a good first shift because you can't just ignore something which is available on the internet. And, you know, as Eric put it out, more than 700 million users now, right? And there's actually utility and there's functionality, which is useful for customers, by the way. So it's a first step towards what we need is a more comprehensive set of regulations. I'm not saying necessarily one set of regulations globally, and we're therefore very early stages of that. And without that, you're likely to see issues every time there are operating controls or issues in any of these companies, irrespective whether it's a stablecoin or a digital asset which is tokenized. Yeah.
Yeah, no, totally agree on that. I would add that for us, you know, as a liquidity provider, fragmented regulation means fragmented liquidity, and that's it's always an issue to have different regulations. The stablecoin example is a very good one because in Europe the equivalent of Genius Act is called MiCA, which is, as always, Europe has been very, very good and advanced at doing a regulation, but it's very restrictive. And for example, some of the US dollar stablecoin are now banned in Europe. So what do you do? Because they still represent 90% of the volumes. So is that good for Europe or not good? You know, it's a big question. At one point, the fact that blockchain and digital assets are reinventing entirely the financial infrastructure of the world, it means there has to be some kind of global regulation, leadership and framework in place for this to work seamlessly. Of course, that is going to come at the expense of many individual interests and competition between the companies and even the countries, which is the biggest blocking point. But yeah, it's a huge topic.
Yeah, I think above all have to avoid fragmentation because I mean it's happening. We almost had it with cloud. We almost had it with data, and if we have it with money, there could be choke points. It's the same with carbon markets, right? It's so confusing. It's so fragmented, and to have a growing and capital markets environment, which you know. Not so much on the retail side, I would say, but capital markets that's financing a lot of these big moves in infrastructure. We really need one, regulators to sit together. So, but I think Singapore does a good job as well with that, and the BIS annual get together between a lot of the regulators, and as well in the US, what I'm seeing, it's there's a lot of the people that have been working in the regulations, they've been around for a long time. It's not that they've just come new. They've been part of all of the conversations over the years. So hopefully, yeah, we don't have too much fragmentation or none at all, really.
Thank you. Super clear. Now, the classic question of how many years of hard work do we still have to do? Traditional finance exists and it works well. Digital assets are doing quite an amazing job and shows new infrastructure, but you have still two systems that coexist. And we need to merge this system, but how much time will this take, in your humble opinion?
I shouldn't go first. We're a long-term institution. Why don't you go first, Pauline?
So I can start. So I think it's already started. 2025, for what we have seen on a trading space and a market making space, has been a very pivotal year when the market has moved from retail and hype to institutionalization of the market. So starting with the ETF last year, but now what we're seeing on top of stablecoin, which we already talked a lot about, there is the tokenization of equities. It's becoming a big topic. We have seen tokenized equities being available not only on spot markets, but also on derivative markets, right? So this has become a very interesting product in the market. And if you think about it, this is really what crypto is about. So global access, decentralized, 24/7 availability. So if you are somebody living in a bit of a remote location, previously you could never buy a Tesla stock. Now you can just log with your wallet and buy a Tesla stock, or at least a proxy of it, which is a big difference, but we won't go into the details. But that's a massive adoption. So when it comes to what's next, as I said before, for me, the 1% is a very good example. So 1% of the dollar is currently tokenized. Probably less than that of the stock market is already tokenized. So how do we go from 1 to 10? It's probably less than 10 years. And yeah, very bullish about all the perspectives that this world leaves us.
Yeah, so I think we're moving. It doesn't feel like it, but moving very fast. 2001, when I entered the job market, we still had voice trading, right, in FX, and that's where I started. And little by little, you could enter UBS, Deutsche Bank, and you wouldn't hear a soul, a pin, right, drop. People building GUIs, APIs. So it moved very fast. And also, we've had Black Swan events. I think Black Swan events have just, we're gonna have so many more. Like this, it's a lot of perfect storms brewing at the moment with AI and the build out. But I mean, something, the adoption of technology just happens in that way. An example I can give in France, which I think was unthinkable before COVID, was that, so to be able, when you build a place in France, you have, I think in a lot of places, but I don't have the experience in other places, but in France, you have to put a big card that says what you're going to build. You have to get a lawyer to come and sign it and all of that stuff. And I was in that position in 2022, and it was COVID. So the government created an application where you use geolocation. You take a picture of that, take a picture of you, ta-da. You send it over, and within 6 hours, somebody sends it back, signed. And I was like, you're joking, in France. So I think it's yeah.
Said no French bashing today.
No, but it's the adoption of something digital, right? And I mean, equally, Station F, for example, and it just seems imaginable that one of the ways to attract entrepreneurs to come to France, if you compare with Germany, which is a lot bigger from a consumer lens, you would think, and also an economy, was that they didn't need wet signatures, actually, and they facilitated a lot of creating a company and so on. So the adoption is there because it just removes frictions.
So I mean, maybe I'll just wear a different lens and say that I'll try and be a bit provocative. Is that I think the financial services industry has just too many profit pools and too many vested interests to move fast, full stop, right? And I've been, for 2 decades, part of the industry in different capacities. So there's going to be no great technology, let's transform the world, let's change the world. It's a slow bleed towards collecting our NAV sort of payouts over time, right? So I don't think that's the catalyst. What's interesting is when we came up with that thesis in 2019, we put it in 3 distinct buckets, and I always say it in that sequence, because that's an indication at speed at which we would see the change. That was our expectations, exactly how it's playing out, much slower than I had hoped for, because I'd hoped to move on to doing something else within Temasek. Programmable money, digital asset tokenization, and decentralized identity and data. And the reason is money is like water. It just finds its way, it just flows, right? Assets are complex, they tend to be registries by country, and data and identity, forget it, right? That's just a long play. If I had to, again, be specific to respond to your question, there's a lot of change happening, including with agentic AI now. And sorry, I had to use that, but it's coming in the e-commerce context, where actually Visa, MasterCard, Google, everybody's woken up, and you can do a lot of things. And so therefore, I would say 5 years is what I would give to a sea change on money movement. It's begun, I always say the barbarians are at the gate, and you were ignoring them. And now, with the regulatory framework, you have no excuse anymore. So you have to start innovating. So all regulated FIs are innovating now without exception. So I think money, I would say 5 years. Assets will take very long because it's fundamental rewiring of infrastructure. So I would put 10 years for that, right? And then identity and data, You can always have a dream, right? And we will see whether it's for this generation or the next generation to change anything on data. The big tech companies are becoming even more scarily powerful. And most of them are American, by the way, which makes it even a different dynamic globally, right? So we will see what happens there on data. Yeah.
So we have a plan now. Thanks a million for all your explanations. Thank you.